Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como. Today is the 28th of May. Got a couple of things to update you on as far as our schedule here, but first, let's run through the futures action for today. Today we saw canola correct. This is the front month I'm showing you here. It corrected down $16.30 to trade back down to 715.90. A little bit of a different action on the new crop. We'll get into that in a second. Minneapolis wheat up 5.25 at 603.25. Kansas wheat up 3/4 of a cent at 525 1/4. Chicago wheat up 1 3/4 at 530.25. Soybeans down 14 cents today at 1048.50. Corn was down 8.5 today at 451. The Canadian dollar was relatively unchanged. Cattle down 120 at 208.18, and feeder cattle down 252 at 295.62. All right. Today I had the honor of speaking with Sean Haney from Rural Ag Radio, or agriculture, realag.com, realagradio.com. His broadcast will be issued at 4:30 Eastern Time. That's 3:30 Central and 2:30 Mountain Standard. So you can listen at realagradio.com, and you can hear me wax poetic about canola and some wheat conditions as well. We're going to get into canola here right away. Today, we saw canola down $16.30 today, which basically erased all of yesterday's gains. There is some uncertainty over biofuel tax credits in the United States, so that's still creating some market volatility. The EPA is to announce soon whether or not the credits will be continued, so there still is some question marks there. We also saw some pressure from canola come in declines on the soybean, or the soy oil complex, the soybean complex, the oil complex, and even European rapeseed, while there were some small increases in Malaysian palm oil and crude oil as well. So kind of lots of things happening for canola here. One of the things that they were talking about was some pressure coming in from some changing weather patterns, or some increase in precipitation coming to the prairies. As you can see here, I mean, maybe I'll draw out here where I feel, this here is a big important area for canola, and Red River Valley here in Manitoba as well. But this is still relatively void of the major precipitation, particularly in a lot of the areas of Saskatchewan. Particularly this northern part of Saskatchewan and into Alberta is really dry, needs moisture as well. So sure, there is some moisture coming into the forecast for this western part of Alberta, the southern part of Alberta, this southeast part of Saskatchewan, and the western part of Manitoba. That will help the canola crop. There is some, quite a bit of canola grown in there, but there's still a big pocket there that is still relatively dry. So when I hear that the market corrects as much as it did today on a potential increase in precipitation, it does lead me to have some question marks around that. I think there were some other factors at play there, including some of those outside markets and things like that. Also, could be the size of the net fund long position, which has been stretched out to a record large recently. So any of these little hiccups that come in the form of soy oil or soybeans, or even this precipitation forecast, could get the funds spooked into selling some of their positions off. Here is what soybean oil did today. It's kind of been knocking back and forth across the 20-day moving average. So I'm not sure if, breaks of the 20-day moving average are necessarily good indicators of what is happening in this marketplace. Maybe it indicates more that we're in a choppy sideways action in this market. Also waiting for some of the EPA announcements and things like that. Again, I mentioned there was a bit of a difference between the July canola and the November canola. We are still, we did see November canola correct as well today, only by about half as much. I think about $8 lower or so. So that means we're still trading near the highs, on November canola. We didn't make a new high. We did make a new high yesterday. Didn't manage to beat that today. Candles red today. Still above trend line, still above the 20-day moving average. So, but for all intents and purposes, this chart still looks bullish. It just, when you factor in the July, it does get to be a little bit choppy with a little bit more question marks involved. Taking a look here at crush margins. Did want to point out a couple things, just even a week ago, here's the week ago crush margin for July, $92. This is the board crush margin. It's sunk now to $72. Look at something like the Nav Dees crush margin at 143 a week ago. That has sunk to 126. Even if you look at that from a month ago, that July crush margin was at 112 and the Nav Dees was at 152. Even the Nav Oct was at 151 at that point. So we are seeing a reduction in crush margins in canola, which also could be putting, a bit of a damper on the canola price, or at least preventing it from, continuing to rally. We do need to see margins in this canola, crush industry in order to continue to try to crush at as much capacity as possible. All right, let's switch gears to wheat here for a second. I stole this graphic from Reuters. Karen Braun, who puts a lot of good graphics on Twitter. Actually, she's really good at doing that kind of thing. This one kind of puts it into perspective. Here is the initial U.S. spring wheat crop rating by a good to excellent rating. As you can see here, this 45% is really low. The last time we saw that was in 2021. Not that this makes a crop by any stretch of the imagination, but it just goes to show how low this one was. Again, the market was expecting somewhere in the 70 percentile mark or 70%. As you can see, that's not out of the range of normal. It has, it would be high compared to the last, within the last 5 years. It was in line with last year. But, the market grossly underestimated or overestimated the crop condition ratings in spring wheat. Here's what that looks like from our own proprietary kind of graph here, where the 45% good to excellent comes in. So again, it's at the lower end of the normal range, or the 5-year min max as we have plotted it here. Last year actually showed a lot of the high watermark here for the last 5 years of so we're starting off a little bit behind the 8 ball and below averages, and for sure below last year. The market also was expecting winter wheat crop conditions to stay steady at 52% good to excellent. They actually dropped a couple percentage points to 50. We still saw some losses in the market today. I'll show some charts here. And that could be because if you look at where we're sitting at here, right, we were bumping up against or into new high territory for this year. It kind of came off that a little bit, but we're still above last year. We're still well above averages here. So overall, the crop condition ratings for winter wheat in the US are really good. It's just that there was a 2-point reduction. And at this point, prior to harvest, we kind of expect that reduction to come. The plants start looking a little bit more sickly as they dry down and get ready for harvest. Here's the July Minneapolis wheat chart. As you can see, today's action was still green. We still saw about 1.7% gains or something like that. Doesn't necessarily look that big based on the candles that we see today. It did kind of punch up towards the highs of yesterday. Didn't make any new highs or anything like that. I thought based on some of those crop condition ratings that we could have seen a little bit more of an explosive Minneapolis wheat, which we did earlier in the session, but that kind of backed off as the session went on. Here's Chicago wheat, just to kind of juxtapose that. We saw some steep losses yesterday, didn't get to make up much of those losses today. In our report, we did, in our written report this week, we kind of detail some of the spreads between Minneapolis and some of the other winter wheats. So you'll want to subscribe to our premium content in order to get that. To do that, go to canadianagmarkets.com/subscribe, and we'll give you the lowdown. In that report, we're also going to talk a little bit about canola and some of the fundamentals that are affecting canola as well. So you definitely want to get your hands on that. Subscribe to our premium content to get that. Other than that, quick video today. Again, look forward to watching Sean Haney and the Real Ag Radio today, where yours truly will be waxing poetic about our thoughts on the canola, wheat, and other markets. So thanks again for tuning in. We'll see you again soon.